Great stuff. So moving on to Forex now, obviously incredibly correlated with interest rates.
Yep.
Could you give me just a little bit of overview of how all these rate decisions could potentially affect the Forex market?
Yeah, definitely. So, if you start at kind of a top line level view, what we've kind of seen for the dollar over the past few weeks and months is we saw that June inflation report kind of really break the back of the dollar rally. We saw the dollar index, if you want to use that as a proxy, it moved from around 103.50-ish to sub 100 levels. So, the direction of travel was really clear for the dollar. Yeah. That inflation report was one of the key drivers that we've seen in recent weeks and months. We've got one today, so let's see how that kind of plays out. But since then, we've kind of moved back to around 102.50-ish. So we've kind of paired a bulk of that move. And, FX markets, they're all relative at the end of the day. So, they're a product of kind of domestic impulses and overseas ones. But for the dollar specifically, clearly growth is holding up a lot firmer, than a lot of people had been expecting. Labour market's still tighter. Yeah. What does this mean for the Fed going forward? So the dollar's kind of, got some sort of appeal kind of back to it, particularly when you think of things about yields as well, about the entire US yield curve above 4%. But I would argue a lot of this is also weakness elsewhere. So if you take something like the dollar index, for example, 60% of that is the euro, okay? So what's been going on with the euro? We've kind of touched upon things like the ECB, that September rate hike is potentially a little bit underpriced. People are a little bit cynical now whether they are going to go again. And a lot of that has been a part of the growth story. So, growth is clearly not holding up as well as people kind of thought it would do a few months ago. One of the feel-good factors at the start of the year for the Eurozone was the China reopening effort. Yeah. Clearly that's faltering. The data from China isn't looking good. And we've seen Chinese officials try and talk up these kind of stimulus efforts. But we haven't really seen anything material which is really going to shift the dial at this stage. And when you consider the market was already kind of net long of euros, this pullback below 110, in the context of growth, does kind of make sense from what we've seen. But as I mentioned, that September meeting does appear, if you think they are going to go in, is clearly underpriced, about 40%. So on August 31st, if you do get a sticky inflation report from the Eurozone, I think there's potential for that to reprice. And if it does, do we see a move above 110 back in the cards? Does this kind of uptick we've seen in the dollar, does that kind of pause for breath? These are the questions which everyone kind of should be asking themselves when looking at the euro. Yeah. But I actually think, one of the more interesting aspects for, if you look at second half of the year performance in the FX space, I think the Japanese yen could very much be the story. So, clearly the BOJ have disappointed some market participants. They're not really embarking on a tightening cycle here. Yeah. Yes, they tweak the parameters of yield curve control, but they're a long way from hiking interest rates at the moment. And we've seen dollar yen, kind of reprice accordingly. I was walking in today, it was around about 144. So, they're moving ever closer to 145, which, is a psychological figure and something which Japanese officials will be aware of, combined with the pace of the moves. It's not necessarily just these levels, it's also the trajectory, how fast things are moving. And do we get any intervention from Japanese officials? Firstly, they'll do it from a verbal perspective. They'll start trying to talk up the yen. If that fails, do we get any physical intervention? And I think relative for where the BOJ is relative to the rest of the world, I think, the cynic in me thinks physical intervention, won't necessarily be too sustainable. Do we get the BOJ actually have to reconsider what they've done so far? Do they actually need to take a more hawkish approach in order to defend the Japanese yen? Again, I'm a little bit cynical about this because it would be quite a deviation from their current stance. And if, we do rip through 145, then is a move to 150 on the cards? And do we kind of challenge some of those highs that we saw back in 2022? And if that is the case, then, if we sit down in Christmas at the end of the year, I think that's the big story that we'll be talking about in the FX space. And then, other factors, if we look at the pounds, we've touched on the Bank of England. Yeah. So, part of the move that we've seen in the pound this year, which has made it one of the best performing G10 currencies, is almost, I wouldn't say the feel-good factor, I'll say things have been less dire than expected. Yeah. We all remember last November the gloomy expectations from the Bank of England. So they were forecasting out 5 consecutive quarters of recession. Clearly, and thank God, that hasn't happened. So, we've kind of seen this move higher in cable above 130, which has also been combined with the stickiness of UK inflation, which has seen the Bank of England have to kind of impose more rate hikes than they otherwise kind of thought they would have done. Since then, we have seen a bit of a pullback alongside the strength of the dollar. And I think it's kind of a tough one. I think, for the pounds to get kind of cool direction from here. But I think, you've got to kind of think about the growth dynamics in the UK. I think, yes, things have been not as bad as here in the first half, but as monetary policy filters through to the economy,
Yeah.
does that begin to bite? The one caveat that I would say is if we've seen other central banks kind of think they're paused but have to come back with hikes, if there is one G10 central bank which could potentially prematurely declare victory on inflation, given what we've seen in the past 12, 18 months, the Bank of England could very much be a likely candidate for that.
Yeah.
And another I'd potentially throw into the mix in kind of like a similar vein would be that of the Australian dollar. Their labour market's particularly tight. The market doesn't think they're going to go again, but things do remain tight, and then inflation does kind of resurface a little bit. Clearly, there's scope for the RBA to come back to the table with interest rate hikes. And that's something the market simply isn't priced for at the moment. So that could be another one to watch. But of course, you've also got to bear in mind it's a bit of a China proxy as well. So when China's not doing good, it does impact the Aussie dollar. But if you do see some stimulus of impacts from Chinese officials, China does get itself back on the feet, and we do see the RBA hiking interest rates, then the Aussie dollar could be one to watch as well. So just kind of like putting this all together, the playbook that I always have in my mind is I want to know where we're at with G10 central banking, where how close are they to terminal, when are they going to start cutting rates, how's the growth outlook underpinning all these things, and measure them relative together. Who's going to be the first mover in 2024 cutting interest rates? At the moment, it looks like it could be the Fed, whilst the Bank of England, I think they're going to hold things tighter for a lot longer. So, all these FX markets are all relative. So having a good playbook and understanding these is going to be pivotal going through. But again, keep in mind the BOJ is a big outlier here. What happens with the Japanese yen?
Some great insights there for the Forex market. Some absolutely brilliant insights there, Adam, so thank you very much. And don't forget to like and subscribe and join us next time.